Soriano here. I wanted to go live here in the group, Forex Smart Money Trading Academy group. And yesterday I did a couple of live sessions. One was in the group here, and one was on my timeline, which I placed into the group anyway. Right now we're live and we're going to do the 62 trade overview. Okay, because yesterday I did a couple live sessions where the first one, I went over the smart money trades from last week. Okay, this was the alerts that came out last week. All 6 of the alerts that came out, I went over them in the video, and they were all winning trades, guys. 2 of the trades I did take, 4 of them I couldn't take. I did take 2, won both those trades. I go over that in this live video. So if you haven't watched this, watch this recording too today. Smart money trades from last week, 116.23, those. And then I did an outlook for this week coming up. So I went over 3 new pairs this week: AUD, JPY, CAD, JPY, EUR, GBP. And I marked up the 4-hour area of interest on the charts for you. And then we'll wait for price to move into those areas. So, you know, we do the smart money trades. What I'm going to call them is, today we're going to go over, so I went over smart money trades yesterday. Today I'm going to go over the 62 trade. And I've been calling this trade a lot of different names: 62 EMA ATH, 62 EMA, 62 AT. I'm just going to call it the 62 trade from now on, because basically we use the ATH for both trading strategies, smart money and 62 trade, right? The ATH is always one of our confirmations that we look for. Our ATH is our proprietary indicator, guys. You have to be a customer of our community to get this indicator. So make sure, if you haven't gotten your free week of training yet, get with me so I can get you set up for tomorrow, registered for tomorrow. You can watch a whole week of live classes, right? Monday and Wednesday, the experts in our community go over to 62 trade. Tuesday and Thursday, they go over to smart money trades. Okay, Friday, they do a Q&A. You can get access to the whole week. If you can't make the live sessions, I'll give you the password for the recorded sessions. Okay, you want to get on the free week of training. You don't need a credit card for that. I just get you the links to register, to join our free group, and to register. Once you go through that, then you can decide to become a customer of our community. Once you do that, you'll get access to all of our training, guys. We have a huge website with a bunch of videos going over smart money and the 62 trade. You also get access to all of the training that the company has that we all belong to, right? And once you join and you pay the fee to join that company, you're a member of our community. You'll get access to everything we have, everything the company has, and you'll have 7 days to try that out, because the company offers a 7-day money-back guarantee. So you can try us out for a week, right? Free of charge, become a customer, try everything out for a week. And if you're not interested, if it's just not for you, if you don't think there's tremendous value in it, then you can cancel and get your money back from the company as long as you're within that 7-day window. Anyway, that's my sales spill for today. Now, like I said, yesterday I went over smart money. Today I'm going to go over the 62 trade. Okay, now, smart money trades, as you know, if you've been in here for a while, watch these videos, we mark up a 4-hour area of interest on the chart, right? We look for the best pairs for the week. We go through all 28, but we only pick about 3 to 5 pairs to actually watch for the week in smart money. We mark up a 4-hour area of interest, which is a banker candle, right? And if you don't know what that is, we got videos here you can watch. There's videos here in the group you can watch right here. Go here, watch this video by Michael. And if get your free week of training, you'll learn everything about the banker candles. But we mark up those 4-hour area of interest. Then when price moves into those 4-hour areas, we drop down to the 1 hour. That's our trigger chart to take the trade. And we look for confirmations. Confirmations are what you'll see in the video, because all of the confirmations showed up last week, right? You got the double top, the double bottom. You have our ATH, which is our proprietary indicator. You have to be a customer of our community to get that, right? That's important because that's one of the confirmations. And also we have candlestick patterns, right? Several candlestick patterns, which I'll go over here today when I do the 62 trade, because on the 62 trade, the confirmations are basically the same, except you don't look for the double top, double bottom. I just use the ATH and the candlestick patterns, okay? So without further ado here, let me get into the 62 trade. And I did create a PDF for you guys, okay? I'm going to pull that up here. I got it on my desktop somewhere. Okay, so we do have it right here, a 62 trade document. Like I said, we're just going to call it the 62 trade, right? Nothing else. Now, in our community, we do smart money, we do the 62 trade, and we also have a 13 trade as well, but that's for more advanced people. So I don't, right now, I'm not showing that or teaching that, and I don't use it at this point as well. So here's the deal with the 62 trade. Okay, now, just so you know, my preference is always the smart money trades, right? Smart money trades are my bread and butter. I love the smart money trades. I think they have a higher win rate. There's nothing wrong with the win rate on the 62 trades. I just think the smart money trades have a higher win rate. The problem is they don't always show up as much, right? So, you know, I marked up those charts yesterday and I have the alerts set for those smart money trades, but sometimes the alerts don't go off because price just doesn't move into the area, into our AOI or our area of interest. So on those days, what I do is I just scroll through my charts in TradingView and I look for the 62 trades. That's how I do it. Now, what I did is yesterday, after I did the live sessions about smart money, I went through all the charts and I looked at looking for any 62 trades that were setting up on Friday. And so I got screenshots of those. So I'm going to show you those here after I go over the rules here for this trading strategy. You know, I'm going to actually extend this PDF document here later today, and I'm going to put all those images in there as well. And that way, you know, I could give this PDF out to people and they can learn the 62 trade the way I take it very easily. Okay. So for me, guys, my trigger chart, just like in smart money, my trigger chart, which is the chart you're going to take your trade on, right, where you look for your confirmations, is the 1 hour. Okay. So my higher time frame with the 62 trades, I want to make sure I'm trading with the higher time frame as well. Okay. Now in smart money, I can go either way, right? I set up a 4-hour area of interest for trend continuation trades as well as counter trend trades, right? And I show that in the video yesterday. So watch that, you'll see examples of both. Okay. But with the 62 trade, you just want to trade with the higher time frame trend. And that's normally one time frame up. So if I'm taking my trades on the 1 hour, then the 4 hour is my higher time frame. Now, if you like to trade on the 15-minute as your trigger chart, then the 1 hour would be your higher time frame, right? And it's usually one time frame up. The only exception is if you're on the 5-minute and you would go up to the 15-minute, that's not quite long enough. So if you do trade on the 5-minute chart, we suggest that you use the 30-minute for your higher time frame trend. So I use the 1 hour. My higher time frame trend is the 4 hour. And what we plot on the chart here are two exponential moving averages, EMAs. We have the 13 and the 62, right? The 13 on my charts is a red line and the 62 on my charts is a green line. You can make it any color you want. I'm a chef, so I like to say the 13 is the salsa and the 62 is the guacamole, okay? So now for long positions, the rules are that on the 1 hour and as well as on the 4 hour, the 13 have to be above the 62. So while price is trending up, and I'm going to show you some examples here, you wait for a pullback to the 62. So when I talk smart money, I talk about AOIs or area of interest, right? So in smart money, that area of interest is a logical area we're expecting the price to pull back to or move to, I'm sorry, not pull back, but move to and react, right? So we set those areas on the 4 hour chart, right, in smart money. And then we drop down to the 1 hour when those areas are hit. Now in the 62 trade, our area of interest is that pullback to the 62. So our area of interest for these trades is that area around that 62 moving average, and we want price to at least touch it, right? It can go through it as long as the 13, right, doesn't change, right? So for long positions, and I'll show you examples of this, but if it pulls back to the 62, it can go through it as long as that 13 line doesn't cross down below the 62, then we're still in a valid setup for the trade. Okay, so while trending up for a long position, wait for a pullback to the 62. And then our confirmations are our ATH, our proprietary indicator, within 3 to 4 candles of the low. I'll show you what I mean here. And we're also looking for a second confirmation. We're looking for a candlestick pattern, either on that ATH candle or near it, right? And for long positions, your candlestick patterns, there's 3 of them that I use. The hammer, which is a 1 candle candlestick pattern, the bullish engulfing, which is a 2 candle candlestick pattern, and the morning star, which is a 3 candle candlestick pattern. Sometimes I may take a trade just by getting a candlestick pattern, right? And sometimes I may take a trade just getting the ATH. That's up for you to decide. Actually, I kind of like, I'm going to show you some examples here, and I kind of like, if I get the ATH, you know, I like the candle it's on to be part of a candlestick pattern, or I'd like to get it right before or after it. And you know, taking the trade on the ATH alone, I may not do, but there are times where, based on the candlestick pattern, I might take the trade based on the candlestick pattern alone. Now, of course, you need to be a customer of our community to get the ATH, which is powerful, because I'm telling you guys, it'll keep you out of most of your losing trades. So you'll lose a lower percentage of trades using the ATH, but you could actually use this strategy just looking for the candlestick patterns. Okay, not quite as good, but you could do it. For a short position, it's just the opposite. We want the 13 or the salsa to below the 62 or the guacamole on both the 1 and 4 hour. Then as price is trending down, we wait for a pullback to the 62. And then, of course, that's our area of interest, right? And then we want a ATH within 3 to 4 candles of, that should actually say high. So I have to change this document, guys, because I made a mistake here. That should actually say high. And then a candlestick pattern on or near the ATH. And then the patterns for the short positions are shooting stars, bearish confirmation, bearish engulfing, and an evening star. Okay, so I'll show you these, you know, when we go over the couple charts that I marked up here for today. Now, notes, these are like the nuances that you learn, guys. You need to get good at identifying consolidations, because the ATH really doesn't work very well in consolidations. Now, if you have a good trend and you get a good pullback to the 62, you're usually okay. But you have to learn, you don't want to take trades where there's no really strong trend in pullback, you know, and price is just kind of floating around the moving averages. So you want to get good at identifying those areas and not trade during those areas. And also, after a currency has moved and it's had like 3 or 4 pushes up or down, you know, then what usually happens is it usually consolidates and then changes trend, or it may continue that current trend. So after you see like 3 or 4 pushes up or down, you need to wait for a 1362 reset, which is a cross. Crosses, you know, if you're going up, it crosses down, then it crosses back up again, right? Trends up, gets a pullback, and then pulls back to the 62 again. Okay, so you want to wait for a reset, or you could just wait for a change of trend, right? Could just wait for the trend to change, because that's probably what's going to happen at some point. So that's basically the rules here. The only thing I messed up on is I have to change this to high for the short position. So I'll do that and I'll repost that. And I'm also going to place these images that I'm going to show you here in there as well. So let's look at a couple images here that I saved for us here. Let's see, where are we at here? Okay, that's that. Okay, so right here, hopefully you still see my screen here. So right here, we got some examples here. I'm going to go over here real fast. So let's just click on these one by one. It says AUD USD. So right here, right, price is trending up. Okay, so you can see that the 13 is above the 62 on my 1 hour chart. That's my trigger chart. It's not showing what time frame here is on these images. Also, the 13 is above the 62 on the 4 hour. I'm going to show you that in trading view here after we go over these examples. Price right here, trending up, moves back, pulls back to the 62. That's the green line here. It also did it here, but I'm marking up this one for the example. So right here, we get a bullish engulfing. So there's no ATH right here, but we get this beautiful bullish engulfing candlestick pattern right on the 62 EMA. Okay, so for me, I'm going to take that trade right there. You could see it easily moves up and reaches my 1 to 2 risk to reward profit target. Now, there is an ATH that goes off here 4 candles later. Okay, now it's much higher up, but you would have to have a much bigger risk here because you would have to set your stop loss all the way down here. However, after price reacts, it does move back up. Okay, so, and just to show you here, what do we get right here? After this winning trade, it pulls back to the 62 again, right? It kind of drops, the 13 kind of drops below the 62 a little bit, but then on this candle right here, it moves right back up. Okay, so these are little nuances. You have to learn to spot them. You have to say, hey, well, it dropped down below. I'm not going to take that trade. I'm going to wait for another pullback. I'm going to wait for it to cross back above and then wait for another pullback, right? But if you would have taken this trade, you have what? You have another giant bullish engulfing candlestick pattern. You could have got in right here, taking this all the way up to here. Now we get another pullback, but it goes right through. But notice how there's no bullish engulfing candlestick pattern here, and there's no ATH. Okay. And right here, by the way, even though this 13 does drop down below the 62 just for a little bit there, you get a bullish engulfing and an ATH on the same candle. So this is a powerful confirmation to go ahead and take that trade, even though that 13 did dip a little bit below there. Okay, so you have to use those, that's up to you to decide what to do. For me, I would take that trade every day, okay, because I have both confirmations there. Here, I only have one confirmation. Now, the other confirmation comes 4 candles later, okay, and you could wait for that if you want to. You just have a bigger risk, and then, but price moves all the way up to here. And then, like I'm saying, when it pulls back again, it just goes right through, right? There's no bullish engulfing candlestick, no ATH. Okay, so let's see. EUR JPY is another one here, right? The 13 is below the 62. You could see here when we set up our indicator, the ATH indicator, it has all of these built into it where you can set it to show you what the 1362 situation is on your higher time frame, which in my case is the 4 hour. So right here, this vertical red line here says 4 hour on it. This is telling me that right here, the trend on the 4 hour, the 13 dropped below the 62. That's also what this red bar is telling me going all the way across. And back here, the bar was green, which meant at this point on the 4 hour, this is an image of the 1 hour, on the 4 hour, the 13 was in fact above the 62. Okay, notice how up here just to show you, pulls back to the 62. There's no bullish candlestick pattern, no ATH, right? Now it pulls back to the 62 here. Okay. We don't get an ATH. We have no bearish candlestick pattern, but right here we do get our ATH. Okay. And then I believe we decided to wait until this ATH right here, or maybe we didn't. Let's see. We get an ATH here. And that was a good trade as well. But right here, we marked it up where we get the ATH. And it's closer to this high here. So you want the ATH to come out within 3 to 4 candles of the high when you're going short. Okay. So right here, we have a high. This wick moves up 1, 2, 3, 4, 5. That's 6 candles away. So what we did was we waited for a new high to be made, which was right in here, this wick, and then we took this trade down. Okay. Now let's go to the next one here. Here's EURNZD. This was in a downtrend here. When I printed this chart, I had this line here. This line here is a super trend line. We don't use that, so don't worry about that line. However, that was showing me what the 4-hour trend was at that time. So right here, we get a pullback to the 62, right? We also have, what this also is this is a giant bearish engulfing, but because of this wick, we don't really like it. I don't really like it. Okay. So we get another pullback to the 62, and then the next candle, the ATH goes off. Now this indicator looks a little bit different because I had our quick turn turned on, but this was an ATH as well. Okay. Here's EURUSD. So right here it was trending up, price moves back to the 62. We get a bullish engulfing candlestick pattern, and that's enough for us to take that trade. When I get these beautiful engulfing candlestick patterns touching the 62, I'm going to take that trade every time. There's no ATH here. Okay. The ATH does come out right here. Of course, we ignore all these red ones because those are telling us to take the trade down. So we don't do that. And then after we win this trade, it goes into a consolidation phase here. And this area here is what you kind of want to stay away from. You see how prices, the candles are close together. It's consolidating in a box. It looks like our box pattern that we use in smart money, right? And then you have all these indicators coming out here. So this you want to stay away from. Okay. Now, if you go over here, you see it does start to trend up, come back down, trends up again, comes back down. What do we get? We get another bullish engulfing. Okay. This is a trade I'm going to show you. This trade set up on Friday. I'm going to show you that again in a minute. So hold on to that. GBP CAD again. The 13 is above the 62. This line is also telling us on the 4-hour, it's the same thing. We get a pullback to the 62 right here. This is not quite a bullish engulfing, but guess what? We get the ATH on the next candle. So we take that trade. That's a 1-to-2 risk to reward ratio trade. GBP JPY, again, trending up here. This is another one where I had the ATH indicator turned, the quick turn indicator turned on as well. But right here, we get the pullback to the 62, and we get the ATH right here. Another 1-to-2 risk to reward ratio trade. GBP USD. Okay, this one trending up here, as you see. What do we get? We get a pullback to the 62 here. We get a giant bullish engulfing plus the ATH on the same candle, right? So we take that trade. We don't know. This trade may have lost. It all matters when price shot up and when price shot down. So that may have been a losing trade. That was obviously news right there. We try to stay away from the news 30 minutes before, 30 minutes after, any red folder news, 30 minutes before, 30 minutes after. Don't take any trades when you're using this 62 trade strategy. Now, right here, we get another pullback to the 62, right? We get another bullish engulfing, and we get the ATH on the next candle. So, we take it right there. Price moves up, then moves back down, then it goes up, gets our take profit, right? NZDCAD is another one here. Again, price crosses up above. This green line and green bar here tells us it's also up above on the 4-hour. We get the pullback to the 62, and we get a beautiful bullish engulfing, tells us to take that trade right there. We also do get an ATH couple candles later, but I would have definitely taken that trade after this bullish engulfing where both candles are touching the 62. That shoots up an easy 1-to-2 risk to reward ratio trade. NZDCAD, same thing. We have price trending up. 13 comes down, doesn't cross back below here. We get another ATH and bullish engulfing on the same candle. Those are the best trades, guys. If you only want to take the highest quality trade, you're going to wait for an ATH to come out and it's on one of the candles in the candlestick pattern. Okay, so in this case right here, we have a bullish engulfing. And again, I can explain these to you later, but it's best just to Google them. Look at the PDF form later today. Go online and Google the different candlestick patterns so you understand everything about it, okay? Because that could be a whole training by itself. So make sure to do that later today so that you understand the candlestick patterns. And if I find the PDF I have, I'll drop it in the group here as well. But right here, we get the bullish engulfing and the ATH is right there on the same candle. Okay, price moves up, comes back, right? We get another bullish engulfing on the 62, right? Price trends down a little bit, then shoots up, and we get our take profit. A couple more examples here. I'm going to put these in the PDF as well, but a couple more examples to show you here, along with the link to this video, by the way. Right here, price is down, right? Price comes back, touches the 62, the green line here. We get a big bearish engulfing. And again, the ATH signal, this red triangle here, comes out on the second candle of that 2-candle pattern, which is a bearish engulfing. And we take that trade right there. Now, if you look here, this trade doesn't quite reach our take profit, okay? But this would have been a winning trade for me, and I'll show you the PDF that I just put in the group that shows you how I exit trades, right? So this would have been a winning trade for me. I would have exited half the position once I was up by 1 time my risk. And then when price, I would have moved the stop loss to break even. So when price shot back up here, I would have got out of the rest of it at break even. So I wouldn't have made as much money as I wanted to, that would like to, but it would not have been a losing trade for me. Now, if people don't have the same exit strategy that I have, then this would have been a losing trade. But why on earth would somebody let a trade go up by this much and then let it turn around and they lose 2% of their account? I don't know here. You're easily up. If you're risking 2% to give 4% here, right? A 1-to-2 risk to reward ratio trade, you're easily up about 3.5% here at one point. And then you're going to let this turn around and you lose 2%. That's a 5.5% swing on your account, right? So it's up to you, but I'll show you what I do. Last one here is USD CHF. This was 13 was below 62. We see this 4-hour flag right here telling us right here. And this bar tells us the 13 dropped below the 62 on the 4-hour as well. Okay, so it's safe to take trades. We get a pullback. Wow, what do we get? A bearish engulfing candlestick pattern right there. Take the trade, goes down. Again, this is one of those situations where I would have exited half the position, but it doesn't come all the way back to break even, and then it goes down, and I would have gotten the full profit on the rest of the position, right? So what happens there is when you exit half of your position, if you're risking 2% to get 4, when you exit half, once you're up by 1 time your risk, and then the rest of the position goes down and gets to take profit, you get a 3% gain instead of a 4. Okay. But in order to preserve my money, I'll take the little bit less. Okay. Okay, so those are the examples I have. Now, let me just real quickly go into Trading View here to show you the charts that I marked up on Friday. Now, what I want you to keep in mind is this. These charts are marked up from Friday's price action. Now, I would never take a trade on Friday. As a matter of fact, I would take a trade. I wouldn't take a trade after 10 a.m. Eastern time on Friday. After 10 a.m., maybe 11 at the latest. The reason is that I have to exit all my positions at 2 p.m. Eastern time on Friday because we don't hold trades over the weekend. The reason for that is because when the market reopens Sunday, 5 p.m. Eastern time, price can gap up or gap down against you. So you may have a stop loss set, 2% of your trading account, right? The price may gap up. You could lose 5% or more, depending on how far it gaps up. So we don't hold trades over the weekend. Okay, I get out of most of my trades at 2 p.m. Eastern time on Friday. Now, if the trade's down, then I may wait till 3 and check again, but by 3 o'clock, I have to get out, right? So we probably wouldn't take these trades. And also keep in mind that I don't take any trades on Sunday evening. So since I'm at the restaurant during the day, I can't take trades basically until the Asian session. So I would not trade until Monday at 7 p.m. Eastern time. The reason for that is I feel that on Sundays, on Sunday night, right, the banks and the market makers are just trying to set things up so that they can make things look a certain way, so that they can get the retail traders to take certain positions so that they can take their money, okay? Because the banks and institutions do 3 things every day. They take liquidity, they know where the orders are in, they know where the stop losses are at, they take liquidity, they mitigate the banker candles, meaning they have to, move back to them, lessen their position in those banker candle areas, and they fill in balance, okay? So again, if you want to learn more about those 3 things in banker candles, you have to get the free week of trading or watch that video in the group I showed you earlier by Michael Angel Martin. Okay, but right here, so on my Trading View chart, you can see I'm on the 1-hour chart. This is my ATH indicator right here. I'm going to go into the settings. Okay, in the style settings here, let's see here where I could show you this. I have labels and lines, okay? And then the inputs, I don't have this, I'm going to click this display vertical trend line right now. Up. Okay, let me just leave this like this. Anyway, you're able to set up this ATH indicator so that when you're on your 1-hour chart, which is what I'm on here, you're able to see what the 13 and 62's position is on the 4-hour. So what this is telling me is that right here, I'm on the 1-hour, that's my trigger chart where I want to take my trades. This is telling me that right here, the 4-hour, the 13 is below the 62, so it's okay for me to take short positions, okay? Now, right here, this green bar was telling me that up until that point, the 13 was above the 62 on the 4-hour. So let me just show you. If we go here and we highlight this candle, go up to the 4-hour, we're going to see that right here on this blue line that I just put in, that's right about where the 13 crosses the 62 down. Okay. So our ATH indicator is set up so that you could just stay on your trigger chart and you could basically scroll through all 28 pairs in less than 3 or 4 minutes to see if there's a trade setting up, right? So that's what's great about it. You don't have to keep going up to the 4 hour, going back down to the 1 hour. You can just, when you're doing the 62 trade, you can just stay right here on the 1 hour chart, scroll through all the pairs. So right here, 13 is below the 62 on the 1 hour, also on the 4 hour. We get a pullback to the 62 here. Right here, we get a shooting star. So that's what a shooting star looks like, guys. That's a one candle candlestick pattern, and it is a bearish candlestick pattern, right? So we could take the trade right there, okay? However, since it's only a one candle candlestick pattern, it's obviously not as powerful, right, as a 2 candle or a 3 candle candlestick pattern. So depending on how long that wick is, I may wait for the ATH. In this case, I waited for the ATH to come out, right? We say that that candlestick pattern should be, the ATH, that should be on or near the ATH. So it's near the ATH here, obviously. And it's also the low, or the high, I'm sorry. That wick is also the high of this pullback, okay? And then 1, 2, 3 candles later, right? Within the 3 to 4 rule, you get the ATH. So this is a trade we would take. So we mark this up, stop loss, take profit. But again, this was from Friday's price action, so I really wouldn't take this trade. I wouldn't take it on Sunday evening either. So I don't really know how the trade's going to play out. I just want to be able to show you these trades kind of before price moves, right? Either way. So that's what you're looking for. 13 is below the 62 on the 1 hour and the 4 hour. You get to pull back to the 62, right? It's allowed to go through it as long as this 13 line doesn't cross back above the 62. Then that would invalidate a short position, okay? You get a shooting star and then you get a ATH. So you get 2 confirmations to take that trade. Another one I found was this EUR USD, right? So again, we know the 13 is now above the 62. If we want to see on the 4 hour, we have to scrunch up our chart here a little bit. Can't even find it. It's so far back that it's not showing up. So sometimes you do have to click on the 4 hour to see that the 13 is above the 62, okay? Sometimes when it's been above there so long, you can't find the bar or the vertical line. You have to scroll all the way back here. Still can't see it. So sometimes you do have to actually go up to the 4 hour to make sure. Okay, so there you go. Anyway, right, we get a pullback here to the 62 and we get a bullish engulfing, right? Let's see here. We get a bullish engulfing right there. And it looks like my ATH signal went off here, but we could also get an ATH right on this candle here. Okay, 1 second here. Let me see something real fast. I just have to log in real fast here. 8, 3, 2. Sorry, guys, 1 second here. So what happens is the password for the RATH indicator changes every week. Okay, everything changes every week. Okay, so you have to remain a member in order to get access to our training, get access to our indicators, everything. Now, I'm gonna you won't see that password because I'll block it out. But even if you do, you don't have the actual link to download the ATH indicator unless you're a member of our team. So anyway, we get a bullish indicator right here, and then we wait for the ATH to come out right there. Okay, so we have two confirmations. We have both confirmations that it is safe to take this trade. Now, the only difference between our 62 trade and our, well, there's a couple differences, but on the confirmations on the smart money trade, when our 4-hour area is hit, we drop down to the 1 hour, right? And look for the confirmations. With the 62 trade, we trade with the higher time frame trend, but we stay on the 1 hour and we look for the pullback to the 62 on the 1 hour and also the confirmations on the same trade, on the same chart. Okay, and then also, I think I got a couple more examples here. I got GBP CHF, right? You could see 13 is above the 62. This green bar here, we had to scrunch up the chart to see it, but it's telling us that the 13 is above the 62 or has been above the 62 for all this time on the 4 hour as well. We get a pullback to the 62, a bullish engulfing. Both the wicks are touching and going through this 62. And what do we get? We get an ATH confirmation on the same candle. And look what happens, guys. We get both confirmations on the same candle. Those are the most powerful signals that you will get. Now, the community teaches just using the ATH. And you can do this strategy just using the ATH, okay? I add another layer to it. I add the candlestick patterns to it as well for a second confirmation, okay? You can just go by the ATH. You could just go by the candlestick pattern, or you can go by both. And if both of them happen on the same candle, that is the most powerful confirmation to take this trade that you can get, okay? The 13 is above the 62 on the 1 hour. This green bar tells us it's also below this, it's also above the 62 on the 4 hour. We can go there and check just to make sure, right? It is. We get a pullback to the 62. We get a bullish engulfing and an ATH on the same candle. Boom. That trade took off on a Friday. It looks like that was 3 a.m. Friday morning, right? That doesn't quite look right. What time would that be? 3, that would be Friday, 3 a.m. Looks like that was Friday at 3 a.m. So obviously that would be a good time to take the trade. You have plenty of time for it to get to your take profit. In this case here, it just comes short, but since it's Friday, you would have closed that trade somewhere up there, right? That's 4 p.m., 3 p.m. Right here, you would have probably closed that trade at 2 p.m. GBP USD, again, 13 is above the 62. We're bullish here on the 1 hour. This bar tells us we're also bullish on the 4 hour. This red line here is for something else, shouldn't be there. And so we get a pullback to the 62. We also get a bullish engulfing. Now, if you didn't want to take that one, right, you get another pullback here and a bullish engulfing, and then you get the ATH right here. So this is how, by using both of the confirmations, it saves you a little bit of money. Because right here, if you take that trade right here, after this candle closes, your stop loss is going to go right here. You probably get stopped out at a loss, okay? Now you get another signal, you get another bullish engulfing, but if you wait for the ATH, it's a better signal. Now, of course, it would have been better if the ATH would have came out on this candle, but it does come out a couple, 3 candles later. So it's within the range that we're looking for. But when you get both confirmations, it's always more powerful, okay? You can test it out on demo and decide which one, how you want to do it, right? You could look for both, or you could look for just the ATH or just the candlestick patterns. It's up to you. Okay, so I hope it helps you out, guys, here. I'm going to drop this. I'm going to edit this document here, the 62 trade document. I got a couple mistakes on here, and I'm also going to add I'm going to add some of those chart images to it as well. And then I'm going to put it back in here. So I hope this helps you with the 62 trades. Yesterday, I went over the smart money trades, right? From last week, all 6 of them were winning trades. I also did an outlook for next week. So you can watch that. You can watch those few pairs there. And now on this video, I showed you how to take the 62 trades. So you really have everything you need to start making money in Forex. But it's always best to start out on demo first, okay? And then once you get good at demo, start trading with your live account. Or, you know, if you're confident that you can pass a challenge test, you can get a funded account, right? You have to pay a fee, you can get a funded account, and you can trade with other people's money while you're trading with your own money as well, or you can never trade with your own money, just trade on funded account with other people's money. Of course, you get to keep 80% of the profits when you do that. If you lose money, you don't have to pay that money back, but if you do lose 10% of that trading account, they will stop you from taking any more trades, but you can take another funded challenge, right? Pass it and start trading again. So I hope this helps you out, guys. That's what you want to do. But the first step is you got to join our community, okay? If you haven't already, get the free week of training, right? You can try us out for a full week, free of charge. Drop me a message or put a message below this video, and I will get you registered for tomorrow. I'll send you information to register for tomorrow. Try us out for a week. You'll like what you see. You join the company we're with, right? You pay the fee to them. You then get access to everything we have in our community, our ATH indicator, all of our indicators. You get access to everything the company has, all the training, all the live training, everything they have as well. I don't ever look at that, guys, because all I need is what we have in the community. The community teaches this smart money and this 62 trade. I don't even need to look at the stuff in the company, but you have to belong to that company to be a member of our community to get everything we have for free. So you join that company. You have a 7-day money back guarantee with that company. So you can try everything out for another 6 days or so. If you're not happy, if you don't think it's worth it, you just cancel. And as long as you're within that 7-day window, they'll give you your money back. You're not going to do that. I guarantee you that. You can see by these couple live trainings I did yesterday and today, the power of the smart money and the 62 trade when it's combined with the ATH as one of the confirmations. So it's Bill Soriano from Pittsburgh. Have a great day, guys. Talk to you soon.